This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. It is Thursday, September 18th. Carol Massar, Tim Stenovec, live at Bloomberg headquarters in New York City. Stocks. We have seen U.S. stocks headed toward all-time highs once again. Chip names and tech heavyweights, definitely the outperformers. This as we continue to get some headlines from President Trump. He is on Air Force One, headed back to the United States.
Yeah, just now, the president's saying that it is up to FCC Chair Brendan Carr if television licenses should be taken away, and calls Carr a great patriot. He spoke to reporters on Air Force One. He said, Carol, that if television networks are almost entirely, quote, against him, then, quote, maybe their licenses should be taken away.
All right, it's certainly one of the big stories, one of the most read on the Bloomberg. We're not going to get to it in this hour completely, but we are later on in the broadcast continuing to monitor some of those headlines from President Trump. We are going to talk about Nvidia, a big story, tech story, semis, Nvidia, that surprising $5 billion investment in Intel. And then we've got some stuff when it comes to the Federal Reserve one day after yesterday's decision, including President Trump asking the Supreme Court to let him fire Fed Governor Lisa Cook.
Also, Dr. Susan J. Blumenthal, she's a retired Rear Admiral, former U.S. Assistant Surgeon General. She's joining us a little later in the hour on why half of the U.S. population faces a gap when it comes to health care.
All right, let's get to the trade. Let's get to, once again, Charlie Pellet. Charlie, welcome back.
Thank you very much. Good to be back with you guys. We got the Dow, the S&P, NASDAQ all surging day after that Fed decision. Right now, the S&P is up 36, trading at a record 66.36 where we stand right now, up by about 0.5%. We've got the Dow up 146, up 0.3%. NASDAQ Composite Index up by 1% right now. Small cap shares, though, the standout. The Russell 2000 Index up 2.3%. The 10-year 4.10%, with the 2-year right now 3.56%. Equities at records after the Fed delivered its first interest rate cut this year, signaled more ahead again. The 10-year 4.10%. Gold down $16 the ounce, 36.43, down by 0.5%. And West Texas Intermediate crude down 0.9%, 63.47 for a barrel of WTI. Bitcoin, meanwhile, trading higher by 1.7%. Bitcoin 117,603 right now on Bitcoin. That Netscope debut has delivered over $1 billion windfall to Lightspeed. Netscope shares jumping as much as 28% in their trading debut this morning. And Nvidia, a topic we're going to be talking about a lot more today right here on Bloomberg Businessweek Daily. Nvidia agreeing to invest $5 billion in Intel, says the two will co-develop chips for PCs and data centers. Intel surging 22.5%, Nvidia up by 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And that's exactly where we start, that agreement or deal for Nvidia to invest $5 billion in Intel. Nvidia CEO Jensen Huang called it a historic collaboration that together they will lay the foundation for the next era of computing. President Trump also weighing in from the UK, where he and the UK Prime Minister Keir Starmer unveiled a new technology partnership to deepen ties on AI and digital assets.
So we're taking the next logical step with a historic agreement on science and technology partnerships, and this will create new government, academic, and private sector cooperation in areas such as AI, which is taking over the world. I'm looking at you guys. You're taking over the world, Jensen. I don't know what you're doing here. I hope you're right. All I can say is we both hope you're right. But it's pretty amazing.
That was President Trump earlier from the UK. With more on the global backdrop when it comes to the industry, Ed has a role in with making so much of our world tick. We are talking semiconductors, of course. I want to bring in Bloomberg TV BTech co-host Ed Ludlow joining us from San Francisco. Ed, just off the phone with Jensen Huang and Lip Bhutan, CEO of Intel, and of course Jensen, the CEO of Nvidia. Ed, what did they tell you? What did you find?
Yeah, I mean, the main takeaway is that the president and the administration were not involved in the brokering of this partnership and deal. It predates more recent events with both companies in the Trump administration. The way that they both explained it is
Ed,
that
really? Do you believe that?
I'm so glad that you did that. So let's get into it. That was what they said.
Okay.
And what I find interesting is that they claim that 12 months ago or more, engineering teams started meeting and working together. Now, that would not only predate the sort of more recent relationship between Jensen Huang and the president and Lip-Bu Tan's relationship with the president, but I also point out that Lip-Bu Tan was not CEO of Intel 12 months ago. He was on the board. So this is a kind of legacy thing, if they're to be believed. Now, to your point, the equity stake and the investment of $5 billion of Nvidia into Intel. How do we interpret that? The way that Jensen Huang answered it is, why wouldn't we invest if we believe in the success of the products that we're working on together? Because they'll realize an excellent return. But nobody in this briefing that I participated in asked Jensen if the investment itself was catalyzed or proposed by the administration.
Yeah, I mean, just the cynic in me would say this looks really good for NVIDIA to make this investment in a company that is partially owned by the U.S. taxpayer, partially owned by the U.S. government, and show his support, show NVIDIA's support for this company. I want to think about this in the broader context. I mean, Pat Gelsinger, Ed, was the CEO at the time, and I think it was notable back in, January of this year, I think it was, when NVIDIA had that big decline as a result of the DeepSeek news. Pat Gelsinger essentially coming out and saying that he was going to buy some of the NVIDIA stock. On LinkedIn, he said that. That was a really big deal because these two companies were seen as rivals even then. Are they still seen as rivals right now?
Guys, if I jump in my car right now and I go 25 miles down the 101 and I park up at Intel and climb onto the roof and I look back across the freeway, I'll see NVIDIA's headquarters. And funnily enough, if I look the other way, I'll see AMD's headquarters. In the context of technology history, we've not seen something like this since way back when Microsoft kind of bailed out Apple, which is a moment in history long forgotten. The way they explain it, and you tell me if you want to get into the nitty-gritty of it, is that it's a simple technology story. The architecture that Intel CPUs are based on still dominate the data center market. So all the CPUs are going to data centers. Intel has a good hold on that market, and NVIDIA sees an opportunity to leverage that to their advantage.
I'm trying to understand. So NVIDIA invests $5 billion. The U.S. took a roughly 10% stake in Intel in August, and that investment so far paying off pretty nicely. Japan's SoftBank Group committed to investing a lot in U.S. chip making. They made a surprise $2 billion investment last month in Intel. It's a rather notable group of investors. How should one read that? What is Intel becoming? Is this a step toward NVIDIA buying Intel? Is there a grand takeaway here?
The way to interpret it is that Intel still needs cash. So Lip-Bu Tan was very honest that he's still focusing on shoring up Intel's balance sheet. The difference between Microsoft investing in Apple way back when is that Apple was facing bankruptcy. Intel's not, but its profit has been eroded or obliterated. And Gelsinger's kind of thing was to try and get back on a product roadmap. Lip-Bu Tan's is like, I'm going to cut back. I'm going to cut down to profit, get the balance sheet strong. But on paper, Intel also represents everything that this administration wants, a U.S. company with heavy footprint in the United States that on paper can do more manufacturing. The problem is this NVIDIA agreement has nothing to do with manufacturing, really.
Well, our next guest was giving us hints and cues several years ago about the chip wars, and so we're going to talk a bit more about it with Chris Miller. But you set us up so well, as you always do. Ed Ludlow, Bloomberg TV B-Tech co-host, joining us there from San Francisco. All right, so let's get to Chris Miller. He wrote Chip War, The Fight for World's Most Critical Technology. It was written in 2022. That book made us all sit up and take notice of the importance of semiconductors to the world, to the most developed nations when it comes to economic growth, national security, and so much more.
Chris is professor of international history at the Fletcher School at Tufts University. He does consulting, but he has not consulted for Intel or for NVIDIA. He joins us from Palo Alto, California. Chris, the book laying it out for us 3 years ago, America's edge is slipping, undermined by competitors in Taiwan, Korea, Europe, and above all, China. Should we be shocked by a partnership such as this? Strange bedfellows in a previous life, no?
Well, I think from the perspective of 10 years ago, this would have been a pretty surprising pair up, but today there's a real logic for it. Nvidia is a leader in AI chips. Intel has been trying to catch up when it comes to AI, but also Intel's got a lot of unique know-how when it comes to building processor chips, which AI servers still require. So certainly on the chip design side, there's differing areas of expertise that both of these companies can bring together.
All right, but just all of it together, the U.S. taking that 10%, approximately 10% stake in Intel over this summer. You've got SoftBank, their $2 billion investment now in Nvidia. What is this? I mean, is this what you thought would happen, need to happen to ensure U.S. remain a dominant player in the semi space?
Well, I think we're going to need to wait and see what implication this announcement has, if any, for Intel's manufacturing business. I think there's no doubt that Intel's going to be an important chip designer in the future, perhaps smaller than it used to be, but they've got a unique position in the market on the chip design side. But from a national perspective, what really matters is Intel's manufacturing arm. And that's where Intel has really struggled the last couple of years to stay at the cutting edge technologically and also to win customers away from TSMC, the Taiwanese market rival. And today, Nvidia produces almost all of its most advanced chips with TSMC. Mm-hmm. There's been a big push from Washington to get companies like Nvidia to diversify their supply and to try to help Intel become a more successful manufacturer of chips for other companies. The announcement today doesn't really say anything about that, but I think a lot of people will ask whether this is a stepping stone for other U.S. companies, Nvidia or some of its peers, to bring more of their manufacturing business to Intel's manufacturing arm.
So chip war, it is on, or where are we? Is it the beginning of the chip war? And I'm just curious, are you starting to think about, I don't know, another book and where it goes from here? Give us your thought here.
Well, I think we're in the thick of the chip war right now. Next to this news about Nvidia and Intel, there's a big debate going on in Beijing and in Washington about which companies should be allowed to buy which type of the AI accelerators that Nvidia specializes in designing that are almost exclusively today produced in Taiwan. And so you've got these competitive commercial dynamics intersecting with high geopolitics. And today you can't really separate the chip industry from the decisions of President Trump or from Chairman Xi.
Well, that's a really good point, and kind of brings me to my question about Intel specifically and the U.S. taking this unprecedented stake in this chip maker earlier this year. What did you think of that, Chris?
Well, I think the U.S. has been pretty clear in its desire, going all the way back to the first Trump administration through the Biden administration, as well as both houses of Congress, both parties, that it sees Intel's success in manufacturing as important for U.S. national security. Right now, most of the world's advanced processor chips are produced by one company in one country, Taiwan. And the U.S. wants a more diversified base of manufacturing these ultra critical chips that are key both for smartphones and computers, but especially for AI. And Intel is one of the three companies in the world, alongside Samsung and TSMC, that can produce these cutting edge chips. And it's the only U.S. company, the only company with a major U.S. footprint, at least right now. And so that's why the U.S. government has been trying to find ways to help Intel out.
So, what would it,
go ahead.
Well, what would it take for Intel to be able to compete with TSMC? I mean, it got money from the U.S. government. It's getting money from Intel here. As Carol always says, the devil's in the details. And you said we need to see exactly where this money goes. But what do we need to see to say, okay, this U.S. company is now competing with TSMC?
So there's no doubt that Intel needs money, and it's raised some money from SoftBank and the U.S. government. But the key thing that it needs is customers for its advanced manufacturing processes. You'd only prove whether or not they work if you've got at least medium-sized, but ideally large-scale customers that are going to let you produce thousands, tens of thousands, eventually millions of chips on your manufacturing process. You can't scale up without customers. And right now, Intel's got a couple of smaller customers for its manufacturing business, but it's thus far failed to win a very large-scale customer. And Nvidia is one example of a company. There are others that could provide a really large contract that would let Intel test out its cutting-edge manufacturing. And right now, I think the entire ecosystem is waiting to see, will it win some big customers that lets it complete that scale-out and testing of its cutting-edge manufacturing?
All right, so we're talking with Chris Miller, professor of international history at the Fletcher School at Tufts University, author of Chip War, The Fight for the World's Most Critical Technology. Hey, Chris, one thing I want to ask you, and I want to go back to China. There was a story I was reading this morning by our Javier Blas, an opinion piece, and it was asking, why is China stockpiling so much surplus oil? And there were like 5 or 6 different reasons, and one of it was, does China fear an interruption in supply beyond U.S. and European sanctions? Oil traders who traffic and intrigue utter only one word, Taiwan. Do you believe that there is a strong possibility that there will be a conflict involving Taiwan? And what does that mean for TSMC, who is so crucial in terms of the global chip supply chain? What could that potentially mean for the United States, the global economy? I mean, can you play that out and what the likelihood is?
Well, there's no doubt it's a possibility. Nobody knows for certain what the likelihood is, but I think the magnitude of impact is so large that even if you think it's only 5 or 10% likely, you've got to take steps to prepare. All of the biggest, most valuable companies in the United States require silicon that today can, in some cases, only be sourced from Taiwan. That's true for Nvidia, true for Apple, true for Google, true for Microsoft, true for Meta. The entire US tech ecosystem relies on Taiwan's expertise. And that's why there's been this push for the last couple of years to find ways to diversify the US from being so centrally exposed to China's decisions about war and peace in the Taiwan Straits.
And the reality is that the US is still very, very exposed, correct? Because of how much TSMC still produces.
That's right. I think the U.S. has made a bit of progress, but there's still a long way to go. And it's a long way to go because TSMC is an extraordinarily capable company, and the entire Taiwanese ecosystem is just so central to producing the semiconductor hardware that our tech firms and AI firms depend on.
What do you think of the politics of this and the fact that TSMC is, has this facility in Arizona and is working to increase its presence here in the United States? Does it put that at risk?
No, I don't think so. I think TSMC's got a strong signal from its customers that they want U.S.-based production. It's got this uncertainty created by the tariffs that incentivizes more investment in the United States. And it's got a signal from the U.S. government, again, across multiple administrations, both parties, that they're going to keep pushing for a bigger U.S. footprint. But I think the challenge that TSMC faces is twofold. First, all of its key R&D remains in Taiwan and will be in Taiwan as far as we can see in the future. So Arizona is helpful in diversifying today's manufacturing, but it doesn't really get you diversification of the next generation. The second thing is that the ecosystem in Arizona is still less developed than it is in Taiwan. And so sourcing the gases and the materials and all the spare parts and specialized equipment you need for a cutting edge chip plant, it's still harder and more expensive in Arizona than in Taiwan. And that's going to be the case for some time until we keep building out the scale of Arizona. And all of that means that Taiwan's going to stay very, very important for our tech ecosystem for many years to come.
Chris, really quickly, 30 seconds here. I mean, was President Trump right in his increasing tensions on China? It started in his first term and ramped up in the second. Was he right, especially when you think about semiconductors? And just quickly, if you could.
Well, I think the key driver of tensions in this sector is actually China's desire to become self-sufficient. We were in a pretty stable equilibrium in 2015 before the Made in China 2025 plan was released. That happened before any of the U.S. policies to support its own chip industry. And that was really the catalyst for introducing geopolitical tension as a central facet in the chip industry.
All right. So glad we could get some time with you. So relevant as always. Chris Miller, author of Chip War and professor of international history at the Fletcher School at Tufts University. Coming up next, the latest Fed decision now 24 hours behind us. Not done, though. President Trump's legal pursuit to fire Fed Governor Lisa Cook, it is still on. The latest on that when we come back.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg Equities, climbing to records after the Fed yesterday delivered its first interest rate cut this year and signaled more ahead. We got more on the topic coming up in just a moment right here on Bloomberg Businessweek Daily. Right now, the S&P 500 index is advancing by 35 points at 6636. That is a gain of 0.5%. Dow Industrials up 147, now up 0.3. Nasdaq higher by 220. 79 points. For the NASDAQ Composite Index, up 1%. The NASDAQ 100 Index, up 1.1%. The outperformer, though, small cap shares. The Russell 2000 Index up now by 2.3%. 10-year, 4.10%, with the 2-year, 3.56%. Gold down $18 the ounce, down 0.5%. And West Texas Intermediate crude, 63.54 a barrel, down 0.8%. Bitcoin up 1.9%, 117,870 on Bitcoin. Federal Trade Commission and 7 states are suing Live Nation Entertainment and Ticketmaster for failing to stem the use of automated ticketing bots on large-scale resale operations. Live Nation down now by 2.8%. Briefly, first day of trading for the cloud security firm Netscope, up now by 18.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we had planned on talking about this morning's jobless claims and moves in the U.S. Treasury trade following yesterday's Fed decision. We will get to that. But top of mind really is President Trump's latest move when it comes to a member of the Fed board. He has asked the U.S. Supreme Court to let him fire Fed Governor Lisa Cook while she fights his attempt to oust her, pulling the justices into a high-profile legal battle with major implications for the United States central bank's independence, something that Fed Chair Jay Powell was questioned about quite a bunch yesterday.
Well, somebody who was there was Michael McKee's Bloomberg TV and Radio International Economics and Policy Correspondent. He's back with us here in the Bloomberg Businessweek studio. Also joining us on the rate side of things, we've got Bloomberg Intelligence U.S. and Canadian rate strategist Will Hoffman joining us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Mike, I want to start with you because I have the pleasure of sitting near you in the newsroom, which is great for me. I don't know how it is for you.
It's just fine.
I ask you a lot of questions.
When I can't find Tim, I turn around and he's like at Mike's desk.
So there was a point this morning, earlier today, where you had a thick printout and you were going through legal document.
Oh, I was reading the Trump administration filing with the Supreme Court.
So what did you find in that filing? What's the case that they are laying out?
There's nothing really new. Basically, they are refiling the same cases they filed in district court and then at the U.S. Appeals Court, arguing that the president has the unreviewable right to fire anybody for cause, and cause is whatever he deems it to be, which the district court judge rejected, but the appeals court didn't address that. The other aspect of it is that the district court and the appeals court ruled she did not get due process because they just went on the Bill Pulte tweet that she did something wrong. And the administration argues that, well, he sent out a firing letter on Truth Social, and that should have been considered enough notice, and then she never called Trump up to complain. And so she forfeited her right to due process. The question for the court will come down to not how silly did that all sound, but does a person in the office that she holds have a right to due process under the law? Because there's some offices that do and some offices that don't.
So, and Will, we're going to bring you in just a moment. We want to talk rates. But Mike, so the issue is it about due process, or is it about, does the executive branch, does the president have the right to fire someone that's part of the U.S. central bank, or was the central bank set up to be somewhat independent, or to be independent, and that the executive branch didn't have those powers?
The real key question is going to be, does the president have essentially an unfettered right to fire people and say whatever he wants is the cause? Because the due process thing, it comes up in a number of different areas. So that's something for the court to settle, but it's not the key question here for the Fed. The key question is, what is cause? Because the Federal Reserve Act says that governors serve 14 years unless otherwise removed for cause by the president. And the argument that the Cook side makes, which prevailed in the lower court, was that the president has to, it basically has to do with what you're doing in office. Okay. And the administration says, no, we can do it at any time. And then the argument that the Cook people made that the judge also kind of accepted is that if that were to be found the case, then the president could just make up something about anybody he wanted to get rid of, and they wouldn't have to prove it because it wouldn't be reviewable, and he could just fire everybody, which is the fear out there that if he really wanted to do this, he could start firing everybody at the Fed.
Feels like it gets also to the rule of law and just, I don't know, some deeper stuff. It's a lot, and it's not done yet. Having said that, I'm not going to say it's confusing, but there's a lot there. But I will say that I feel like, I don't know if the dot plot was confusing, but there was a lot there too, and a lot of choices. Matt, come on in. Come on in. Will Hoffman, U.S. and Canadian rate strategist at Bloomberg Intelligence, is with us. Will, the rates market moved down right after the Fed decision, then it moved back up where it was pretty much before the decision. That was yesterday. Today, rates have moved up again. Shift in expectations about rate expectations this year and for next. Is there a smart takeaway from what's going on in the Treasury trade right now, in the U.S. rates trade?
Absolutely. Thank you for having me, as always. So yesterday, I guess the best way to describe the press conference was volatile, which we saw kind of in front rate pricing. But the move today is pretty unsurprising, with yields selling off a little bit. A lot of the move has to do with what's going on across the pond over in Europe, with Bank of England decisions coming out this morning and some bear steepening in their bond curve as well. But given how far U.S. rates fell and how fast they fell, it's unsurprising that after we bounced off that 4% level that we probably took some profits and take our time to think about where we may head to next after the word insurance cut popped up after a terminal rate of 3%.
I know we're talking about yesterday's Fed meeting, but I want to go back to what Mike was saying about this new filing from the Trump administration and its attempt to fire Lisa Cook, because it's all related here. And I'm wondering what the bond market reaction would be in your view. What's the Bloomberg Intelligence view of what would happen if the Supreme Court came out and said, yes, the president can actually fire Lisa Cook?
That's a great question. I think the current state of the headlines has not had a huge impact on short or long-term rates with relation to the Lisa Cook news. It's been in headlines for a long time, and it's a risk that we've had a decent amount of weeks to digest. But when the Supreme Court does finally come down and say, in this case, yes, at cause is a wider definition than expected, you're probably not going to see much of a, I'll say, sell-off in the front end. It's really going to be a 10, 20, 30-year space issue. We saw a flash of it right when, I'm not sure if anybody remembers amongst the flurry of headlines, but that one that we got of, I've drafted or someone said that there was a letter drafted to fire Powell, and the 2s30s bond curve did something called a twist steepener, which you usually don't see persist for very long, where 2-year yields rally and 30-year yields sell off. No one trades 2s30s necessarily because of the duration mismatch, but that's where you're going to see any behavior. And it's going to be, I'd say, a pretty meaningful move if we do have the probability of, I'll say, a revolving door in and out of the Fed building over the next couple of years.
But Mike, if the president, if this goes to the Supreme Court and they rule in his favor, would we assume that the next target would be Fed Chair Jay Powell, that this has then emboldened the president and actually expanded his powers?
We don't know, but there is a theory that would embolden him to try to fire Jay Powell. He could also go to try to replace others on the board. He wants a supposedly majority on the board to be able to block the Fed Bank presidents from being reappointed. And right now, if he gets one more seat, he'll have 4 of the 7. But I don't think Chris Waller will go along with that, and I'm not sure Mickey Bowman would go along with that. So he'd have to fire a couple more people to try to get a control of the board that he would do.
Would go crazy. Would you not expect?
I would expect so. I'd take Will's word for it. But because then essentially what the president is trying to do is take over the board and lower interest rates. And then, inflation runs wild in people's minds, and so the market sells off. This is a 2-part thing. The decision about about cause, et cetera, is a longer-term case for the court to take up and get briefed on and have oral arguments and that sort of thing. The question right now is, will the court say that she can be fired while this is being litigated? Will they put a stay on the district court injunction against her being fired? And that has been the thing that happens very quickly with the Supreme Court in all these firings. So it could be sometime this week that we might hear from the court on that.
Will, a common refrain has been that the bond market will essentially serve as a guardrail here. And I think it's fair to say we saw that in the wake of Liberation Day when the president said, the so-called Liberation Day, when the president said that the bond market got a bit yippy and he pulled back a little bit on the aggressiveness, at least of the timeline with those tariffs. Does that still happen in this day and age?
It's a good question. I'm sorry, I did lose you there for a minute, so I missed the start of it.
Well, just wondering if the bond market still serves as a guardrail.
Absolutely. I will say probably less of an extent as the dollar is going to serve as a release valve for any pressures that we see in the bond market, meaning as the bond market tries to price in terms of yield higher and higher to offset forward expectations of higher deficits and higher growth, higher inflation, et cetera, you will see likely an attempt to maintain some form of moderate interest rates, whatever definition it may be from Fed and Treasury, in which case the currency will act as more of a shock absorber. But for now, real yields have been driving almost all of the move that we have seen in the U.S. bond market this year. Break-evens across the curve are essentially within a basis point of where they started the year, and everything has been real yield, which to us just signals its forward growth expectations, realized volatility, and to a level implied volatility, as well as what the deficit may be on a forward basis.
It's just a lot. It's a lot. Mike, you were there at the Federal Reserve yesterday. I mean, Jay Powell, I mean, when you look at the economy, I mean, he made a statement of, like, it's really hard to kind of figure this out right now. Do you agree?
Yeah, that was the message, that that don't take the dot plot seriously, because we don't know if we're actually going to cut two more times, because we can't figure out the economy. We know that the latest data show that the labor side has slowed, and we kind of expect that to continue because businesses are telling us they're not hiring right now, but we don't have proof of it, and it's a lagging indicator. We also expected inflation to go up a lot faster than it did because of tariffs. It's gone up. We think it will be a one-time event, but maybe it's not. So I think what you get because of the dot plot and the way it's put together is you get this median dot. And the median said 2 cuts this year, but it was 1 vote either way. And so if they don't do that, then just wait, basically, is what I'm saying, until you get right up to the meetings.
It's tricky. Michael McKee, of course, here in studio, and Will Hoffman, Bloomberg Intelligence, U.S. and Canadian rate strategist.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got equities at records. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all pushing higher. S&P up 37 right now, up 0.6%. The Dow up by 0.2%. NASDAQ up 1.1%. The Russell 2000 index of small cap shares up 2.3%. 10-year 4.10% with spot gold currently yielding. The price is down 0.5%. An ounce of the precious metal now at $36.42, while West Texas Intermediate crude down 0.7%. WTI 63.62 a barrel. Lyft is testing a feature that will tell drivers how often a rider tips and how punctual they are. Lyft shares down 2.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time now for the Bloomberg Businessweek Women's Health segment, where we focus on key issues and developing technologies that are impacting the present and future of women's health around the world. On that, over the summer, we saw the Gates Foundation announce a $2.5 billion commitment through 2030 to accelerate R&D focused exclusively on women's health. And then earlier this month, Melinda Gates announced a new partnership that will commit $100 million to accelerate women's health research. She's focusing on areas of women's health with the highest rates of mortality. That includes autoimmune disease, mental health, and cardiovascular health. So we've got a great guest to talk about all of this.
We've got Dr. Susan J. Blumenthal joining us. She's retired Rear Admiral, former U.S. Assistant Surgeon General, and the first ever Deputy Assistant Secretary for Women's Health. She's also visiting professor with the MIT Media Lab. She joins us from Washington, D.C. this afternoon. Dr. Blumenthal, Carol just mentioned some of the money that's going to women's health issues around the globe. I think I know the answer to this question before I even ask it. Is it enough?
Well, no, but it's excellent that new investments and innovations are coming to bear on women's health. Women represent 51% of the population. They make 80% of the healthcare decisions, but their health has been traditionally, underfunded and under-innovated. And so we hope to turn the page here in the 21st century.
Are you hopeful that that actually happens? Because I feel like this is, we laugh, but it's not even, I think about it, not funny. Like, women's issues have been underfunded, undercovered. I have doctors in the family, both women. We talk about this. They see it. We see it. I see it. I have a daughter. It's just when it comes to women's health issues, it just feels like they have been ignored for a long time.
Well, let's, kind of backtrack. Let me tell you a story about how we got involved with women's health. I mean, when I was a child, my mother had cancer, and I decided to become a doctor. No other woman should have to suffer the way she did. I was very honored to work at the National Institutes of Health for 12 years, and there helped to expose the inequities that existed, that women had been excluded from research studies on heart disease, on AIDS, on lung cancer. Sex matters, we all know that, but in the conduct of research and the delivery of healthcare services, women had been excluded as a target, as a focus. So as the first Deputy Assistant Secretary for Women's Health, we really shone a spotlight on these issues. We wove a focus on women's health into the fabric of NIH, CDC, FDA, because then there were no women's health conferences, there were no reports, there were no fellowships, and there were no centers. And so the study of women's health and sex differences became a forefront issue in the 90s, but then got mainstreamed. And I think, there were still so many other issues that needed to be addressed. We built the infrastructure, but the innovation, needed to continue. And that's what I hope is happening now here in the 21st century, because we're bringing a whole new toolbox to the fight for better women's health.
Well, Carol mentioned what Melinda Gates has announced, the idea of sending money toward the highest rates of mortality, autoimmune disease, mental health, and cardiovascular health. One area that we wanted to focus on this afternoon is mortality when it comes to pregnancy and when it comes to childbirth, maternal mortality. And the CDC said that improving maternal health care is one of its new priorities. They posted this document last night. What are the biggest areas for improvement there? How does the U.S. solve that?
Well, I think maternal health, it is shocking that in the United States, we have the highest maternal mortality rates in the industrialized world.
Why is that, in your view?
Well, I think, again, because there are a number of issues that go underreported. There is diversity in communities. Women are not having the same access to care and are not there's not education for both the woman and her healthcare provider about the signs and symptoms to be looking for. So I hope that this will change. We need to do much better education and targeted education. We now have new communication methods that need to reach and personalize information to individual women. And with technology, we'll be able to access care in more rural or underserved areas. For example, ultrasounds, small miniature ultrasounds that can be taken into communities in underserved areas, and then with telehealth, wire it back to a physician to interpret it. And some of the breakthrough technologies that are underway are to, for example, do a pinprick to get some blood to look for preeclampsia, which is associated with hypertension that can cause death in mothers. So I think, there's a lot of work to do, but there's also a lot of innovation that can be brought to this space.
Dr. Blumenthal, one thing I wanted to ask you, the CDC's vaccine meeting happening today and tomorrow. Just curious, one of the things that's being discussed is changing the hepatitis B vaccine recommendations for newborns and screening all women for hepatitis B. What do you think of this? I'm just curious about it.
Well, I'm very concerned as a public health doctor. I think that, if you think about it, 150 years ago, average life expectancy was 38. We've doubled life expectancy in this century. In the year 1900, 18% of children died before their 5th birthday. Vaccines and other public health interventions were major contributors, were landmark contributors to this extended lifespan. A generation has grown up not seeing the devastation of polio, smallpox, diphtheria. And so disinformation is circulating. Hepatitis saves, vaccines have saved 20,000 babies. And so I think it's very, very irresponsible to be changing these guidelines when we know that vaccines save lives.
What does this look like if the guidelines are changed? How does it manifest itself in public health? Do we see immediately a spike in things, in your view, that could be prevented through vaccines?
Well, we've seen a spike in, for example, measles. We've seen some of the highest rates of measles that we've seen in decades. Measles can cause disability and can cause death. I think there have been 2 or 3 children that have already died. So I think in the past week. So yes, I mean, I think we will. And again, for measles, you need to have 95% of children vaccinated for herd immunity, so that you're protecting everyone in the community. Right now, there's been a study that showed that 1 out of 6 parents is questioning whether to follow the vaccination schedule. So again, disinformation is circulating, and people are getting very confused. If we don't have our major public health agencies consistent in their guidelines, then it's up to the states to create their own recommendations. For example, in my state of Massachusetts, our governor has said that anybody who wants a vaccine will be able to get it, and that insurance companies need to pay for those vaccines. Because again, under the Affordable Care Act, in the preventive services guidelines, vaccines were covered under your insurance as a free preventive service. This may change if the guidelines change. Means that vaccines will cost people money, and that will be an obstacle to getting you or your child vaccinated.
Dr. Blumenthal, before you go,
that's life-threatening.
And very important. Before you go, we've just got 30 seconds. Your family involved in public service. Your husband's still in it. Senator Ed Markey, of course. You were in it for a long time. What do you hear, what it's like to be in public service now, considering some of the attacks that we've seen, it feels like, from various groups and entities? And just got about 20 seconds.
Well, it's an honor to serve. And sadly, I think, it's a challenging time. But to be able to give back to your country is extremely meaningful. And just to end this with women's health, improving women's health means improving the health of families, of communities, and of countries.
Got it. Thank you so much.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are coming up on the last hour of trading, almost there. You've got stocks. We've seen some gains across the board, still up about 41 on the S&P 500, 161 points higher on the Dow Jones Industrial Average, and we are definitely seeing outperformance with the big tech names. That index, NASDAQ 100, Tim, up 1.2%, a gain of about 284 points.
I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. With us now is Bloomberg News senior reporter and deputy team leader for U.S. equities, Jess Menton. Jess, I hope you're looking at Intel.
Of course, the best performer
I'm just making sure.
in the S&P 500 and the NASDAQ 100. INTC is the ticker symbol. So up 23% at this point, so on pace for its best one-day percentage gain since October of 1987, so almost 4 decades ago here. And of course, for people who remember, Intel actually got kicked out of the Dow last November. And usually when that happens, it can be a little bit of a contrarian indicator for some traders if you think of when Exxon or GE got kicked out of the Dow. But what's interesting about this is Nvidia actually replaced it in the Dow. But what happened here and why it's up so high today is actually Nvidia has a $5 billion investment with Intel. And so when you think about the AI story and the theme here, Nvidia and Intel said they would collaborate in developing chips for personal computers as well as data centers. So Intel, for context, specializes in chips known as those central processing units that serve as the brain of the computer. So Nvidia actually makes those graphics processing units. So that's more of kind of the powerful tasks stocks, like crunching a lot of data in that. So this is why it's important. So basically, Nvidia throwing a lifeline to a one-time rival here. And the New York Times actually reporting earlier today that the Trump administration actually approached Nvidia 9 months ago and asked it to invest in Intel, according to two people familiar with the knowledge. So interesting context here when you look at a stock like this, but I have to point out Nvidia stock, NVDA is the ticker, up about 4% right now.
Yeah, interesting. And I was just looking at Intel. It was a almost $75 stock back in 2000. Yes. It did go up as much to the level of like about 68 and change back in April of 2021. So it's still like half of that.
It's true. And you have the Dow trading around records right now, but then also Intel since November 8th of last year, whenever it got kicked out officially and Nvidia got added, it actually is outperforming Nvidia as well as the Dow in that time span, up over 20%.
Right?
So some context there.
All right. Darden Restaurants, ticker DRI.
Now, looking at this stock down almost 7%, so on pace for its worst day since May of 2022. So this is a company that owns the parent company, so basically Olive Garden when it comes to those breadsticks, as well as Longhorn here. And formerly used to own Red Lobster, which I used to work at, but unfortunately Red Lobster has their own stuff. That was back in college, so many years ago.
I thought you were going to say something about Longhorn because you're a Texan.
No, surprise, actually. But they don't own that one anymore.
Okay.
Red Lobster has its own sort of bankruptcy issues that it was going through in recent years. But nonetheless,
maybe a turnaround. Maybe
right,
a turnaround.
That's true, but they're seeing some bright spots there with some of those endless shrimp specials that they tend to have in the fall, just for context in case people wanted to know. But besides all of that, so Darden actually, so I mentioned it's stock down around 7% on pace for its worst day since May of 2022, but its first quarter comparable sales, unfortunately, at its core restaurant brand, so the two I mentioned, Olive Garden as well as Longhorn, those disappointed, so those profit expectations, trailing Wall Street expectations for the quarter. So really, unfortunately, food inflation, still feeling a lot of that at those companies. If you look at the A&R function in the terminal, 20 buys, 12 holds, and 2 sells for Darden.
All right, good to know, good to know. All right, Cracker Barrel.
Yes, so this, of course, I think you were out a couple weeks ago, Carol, when Tim and I were actually chatting about this, but this was back in late...
I thought you were going to say that you went to Cracker Barrel, had a bite to eat, hung out.
Well, in late August, they actually wiped out nearly $100 million in value after that rebrand that was very controversial was announced. Looking at its stock now, the ticker CBRL down 7% on pace for its worst day since September 2nd from earlier this year. The stock actually had been down around 6% this year through Wednesday's close, obviously after that gyrations there, but unfortunately it has a weak forecast that's been pressuring that stock. So Cracker Barrel, unfortunately cracking under the pressure when it came to that controversy.
What did they do? Did they get rid of the guy?
It was the uncle, yes.
Isn't he called the old timer?
Uncle Herschel.
Oh, yeah.
Yes. They wanted to remove him.
I thought he was called the old timer.
So they got rid of him?
And he had the overalls, and then they were just going to have it without it. And it really caused an uproar, unfortunately.
Seriously, with all that's going on in the world?
Right. And so critics were accusing the company of sort of erasing traditional elements that were tied to the brand. But unfortunately, when you look...
Companies change brands all the time.
Right, I know. And so they really kind of backed down for the pressure there after what it did to its stock. But so its revenue for fiscal 2026, which will run through next July, it's projected to be in the range of $3.35 billion to $3.45 billion. And unfortunately, analysts were expecting sales of $3.52 billion in that period. So unfortunately, that stock feeling some pressure once again today.
I think I said it last night. About 25% of the float is short. So
yes.
You can see the negative sentiment on this one in a big way. Jess, thank you, as always. Jess Menton. Check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it wherever you download your podcasts, Apple, Spotify, anywhere else.
Hey, coming up next on Bloomberg Businessweek Daily, where we continue on YouTube, Bloomberg Originals, and of course on Bloomberg Radio, we're doing a deep dive on the First Amendment in the wake of the indefinite suspension of Jimmy Kimmel's show. Katie Fallow is going to be joining us. She's Deputy Litigation Director for the Knight First Amendment Institute at Columbia University. We're going to talk all about that and, of course, President Trump's comments that he made just in the last hour on Air Force One.
It's a developing and ongoing story. Meta's new smart glasses. We're going to talk about that with Mark Gurman, and also talk about foreign direct investment into Ireland, what they are seeing, what it says about the global economy. If you're watching on TV, the close is coming your way in just a moment. Tim and I continuing right here on Bloomberg Businessweek Daily.